What up, YouTube? It's November 1st, which means it's Christmas time. So, today, we're going to do... and we'll the slow fade out. And all right. Shout out Santa. What up, Rudolph? I'll be seeing y'all soon. Today, we're going to extend the balances. 6-3 literally says extend the balances. Rule a single line. Figure out your net profit or loss. Rule them up. So, all we have to do is take these accounts and extend them to the correct spots. Here's a helpful hint for you. If I were you, I would draw a line right next to income summary, and then all of the stuff above this goes on the balance sheet, and all of the stuff below goes on the income statement. So, all of this stuff is BS. Balance sheet. All of this stuff is income statement. So, now that we know that, let's just copy and paste the accounts that are going to remain unchanged. And then once we get to these adjustments, we'll have to figure it out. So the first one, cash. Let me zoom out here. Cash is $9,800. You just bring it over, leave it as the same balance. If it's a debit, it stays a debit. Just bring it over. Petty cash is $150. Just bring it over or extend the balance. 150. Next one is accounts receivable, Ruby Prince, $27.95. And now the very next row is supplies. If you remember from my last YouTube sensation viral video, we did adjustments. Adjustments were when we had an account that we're not tracking on a day-to-day basis, but we just see how much we lost at the end of the month. So we had 456. We lost 131, which means, we did the math up here, which means we end with 325. So our supplies balance is 325. The next one is prepaid insurance. Same exact idea. Our ledger account was $750. We're ending with $500, which means we lost $250. So the end amount is $500. So that's your balance on the balance sheet for prepaid insurance. Next one, we get into a liability. We have an account payable, Richard Navarro, 555. Go ahead and put that on the credit side, like all liabilities, 555. Then we have 2 owner equity accounts. You know their owner equity because it contains the owner's name, Gary Baldwin. So Gary Baldwin Capital is 14,885. It is a credit, so it stays a credit. 14,885. Capital, again, we could call that the value of your company. And then Gary Baldwin drawing. Drawing is a debit. Drawing is you taking money out of your account. So this is owner drawing, and it is a debit of $3,400. It is the opposite of capital because capital is the value. Drawing is what you're taking out of the company, taking out value. So that's all we have to do for the balance sheet for right now until we get into totaling. So now we've hit income summary. Income summary does not have an account balance. There is a ledger that we're going to use for income summary, but for now, it's blank. So line or row 10 through 15 is going to be income statement accounts. So you bring over the sales amount is $43.20. Then you bring over your expense amounts, which are all debits. First one is $931 for ad expense. Zoom in on that. $931. The next one, we had a zero balance in the trial and an adjustment debit of $250. So the balance is going to be $250. Next one, miscellaneous expenses at $378. $378, it stays $378. Next, we got supplies expense. This was an adjustment. It had a zero balance. It got adjusted $131. So $131 goes right here. And then the last expense is utilities. It has an $1,100 balance. You're going to extend the balance, and it is $1,100. So as of right now, you have extended all of the balances. You put all the balance sheet accounts in the balance sheet columns. You put all the income statement accounts in the income statement columns. The next thing you have to do is do the one single rule, which means you draw a line under them. And then we're going to add them up. Try to make it a little darker. So let's add up the income statement debit and credits first. I will do the credits. You guys do the debits. Done. So I'll pause the YouTube video while you YouTube subscribers at home do this on your own. I'll pause. Unpause. What is it, Bernsey? 2,795. How'd you get a 95?
Yeah, it should be like 90.
Ah. Well, I'm just looking at the ones column. We got a 1, an 8, and a 1, and that is not going to be a 5. Is it 0? All right. So 2,790 is what the student who will remain nameless, so as to not embarrass him on YouTube, Ben Burns, excuse me. It's 2,790. I have now cyberbullied a student. This will be my last accounting video. All right. So we have the sales and we have the expenses. So to figure out how much money our company actually made, we're going to subtract the two. So 4320 minus 2790 equals 1530. I'm going to put 1530 right underneath the expenses total. On line 17, I'm going to label this as net income. Sometimes you'll hear this called net profit. It's pretty much the same idea. So net income for this company for 1 month is $1,530. That means sales minus all the money they spent. They brought in $1,530. Because accountants are the way they are, if you're an accountant watching this, well, why are you watching this? But if you're going to be an accountant, you're going to then add these numbers up.
You're gonna be an accountant. Probably still gonna be watching.
Right. Yeah, it's true. you're going to add these up and make sure that they equal that number. So because of the, I don't know, math, since this minus this was this plus this should be this. I think that's the distributive property. Don't fact check me. Don't fact check me. All right. So you got a 0, you got a 2, you got a 3, you got a 4. 4320. 4320. If you have two things that are supposed to equal that equal, double line it. So this is our net income, but because accountants want to double and triple check everything and make sure that everything adds up, make sure there's no errors, they add these two together, the net and the expenses, and they get the sales. Now, the balance sheet accounts are going to be added up. So I will, again, pause the video. I'll add the debits, or I'll add the credits as you guys add the debits. Go ahead and do that at home. Ready, pause. Unpause. All right. So my incredible accounting team has added up the debits, and we got 16,970. And then I, as the leader that I am, added all of the credits and got 15,440. So these numbers do not equal. However, this is the end of a month. And this column right here had owner capital. Owner capital is the value of a business, and this is the end of the month. So you're going to take the net income that was earned by the company and add it into where owner capital resides. So you'll put 1530 down under here. You'll do one line. And that one line means go ahead and do some math. So I'll add up the debits, you add up the credits. I got 1690. 16,970 is what I thought I said. Idiot. And 16,970 is the credit balance. When you have two things that equal that are supposed to equal, you double line it and make this accounting noise. Accounting noise not required, just optional. But if you look at this whole document from a macro level, it looks like a lot. But in reality, these are your accounts and their ledger balances, and then we added them up. These are the adjustments, the loss of value in accounts, and then we added them up. Then we took sales and expenses, which is what every company in America does, sales minus expenses, to figure out our net profit or income. Then we added our net profit over into the owner section of the balance sheet, added these up, they all equal. This is what accountants do at the end of every month or fiscal period. They probably do this computerized, maybe on paper still, but that is Chapter 6, 8-column worksheets. And for that, I wish you a Merry Christmas.